Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and the title of the video is The Power of a Zigzag Pattern. The Power of the Zigzag Pattern, alright? In this video, I want to talk about how we can use the zigzag pattern to make effective day or swing trading decision. All right. The zigzag pattern allow day traders and swing traders to make profitable trading decisions. All right. By using the zigzag pattern, we have an unfair advantage over other market participants. All right. But the first thing we want to know is to understand, where the zigzag pattern form and the internal waves of the zigzag pattern. All right. Now, the first thing we need to understand is that the zigzag pattern is what we call a corrective Elliott wave. The corrective Elliott wave will correct, all right, we correct an impulsive wave, all right. So, for instance, we know also, according to the guideline that we use, that the zigzag pattern is often formed after a diagonal, a leading diagonal, after a leading diagonal. The leading diagonal is the complex first Elliott wave. When the first Elliott wave is divided into 5 waves, when the first wave is a complex Elliott wave, is what we call a leading diagonal. The zigzag, the leading diagonal, will be followed very often by a zigzag pattern. So when we see a leading diagonal, there is a high chance that the second wave will be a zigzag pattern. We also know that a zigzag pattern is often, not always, is often formed after the motive wave. The motive wave is formed of the first wave, second wave, third wave, fourth wave, and the fifth wave. So we see a trending phase. The Elliott wave cycle is formed of the motive wave and the corrective wave. The trending phase plus the correction, that's what we call the Elliott wave cycle. Sometime at the end of the motive wave or after a trending phase or after an impulsive wave, we are likely to have a zigzag pattern. The zigzag pattern is formed of 3 waves. The A wave, followed by the B wave, and the C wave, all right? So between the red line and the first turquoise line, we have the A wave of the zigzag pattern. Between the 2 turquoise line here, we have the B wave of the zigzag pattern. Between the turquoise line and the black vertical line here, we have the C wave of the zigzag pattern, all right? So, how do we use the zigzag pattern for day trading purposes? As a day trader, when you see, for instance, an impulsive wave, price goes up very, very fast, bullish like this, all right? And then the price starts coming down, but it comes down into 1, 2, 3, 4, 5, like this. We know that the correction normally is formed of a 3 wave. But when we see an impulsive wave followed by a correction that is formed of 5 manual wave like this, the first thing that is coming to our mind is a zigzag pattern. As a day trader, once we see that the price comes down after a bullish move like this or a bearish move, it's also true for a bearish move, and then the price goes down like this, 1, 2, 3, 4, 5, all right? At this point in time, when we see that there is a 5 manual wave like this, we can look for opportunity to buy right here. This is about understanding, the zigzag pattern. So, we see a bullish move or we see a bearish move and then we see it goes up 1, 2, 3, 4, 5. We know that the correction is not finished because the corrective wave is normally formed of a 3 wave. But because a corrective wave is formed of a 5 wave, we see that this move is coming down to correct the first bullish move, but it's formed of a 5 internal wave. We know that the correction is not finished yet. So we can buy here and the price will go up very often, 1, 2, 3, up to the 50% of the A wave. So we can buy here and then take profit right here. So we are looking at the internal wave of the zigzag pattern. This is what gives us the power. By identifying the internal wave of the zigzag pattern, we are likely, okay, to make excellent decision on the edge. So we will buy here and we will sell here, and then we will be prepared to take profit right here. And we can also buy again here, because we know that the zigzag pattern is completed at this point here, because formed of 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5. So we know now that the C corrective wave is completed right here. We can buy again here. The opposite is also true in a downtrend. When the price will go down fast, we have a bearish impulsive wave or a bearish trend. Then there is a correction formed of 1, 2, 3, 4, 5. We know that that correction is not finished. So as the price goes up 1, 2, 3, 4, 5, somewhere here, we can sell. All right, as we sell for day trading or swing trading, price goes down 1, 2, 3. I don't want to draw all these lines. Then you come back down 1, 2, 3, forming the B wave of the zigzag pattern. Here we can buy again, because we know that the correction is not finished. It's likely to go back up again 1, 2, 3, 4, 5. As the zigzag pattern is completed right here, after, you see, this is a correction taking place. So there was a bearish move, and the zigzag pattern is being formed to correct, okay, the previous impulsive move. Here we can sell again. This is a powerful tool for day traders and swing traders. Sometimes, even if you are using a Fibonacci, and also for Fibonacci traders, you will see sometimes the Fibonacci retracement, the price will go down first, and then will be corrected by a zigzag pattern. 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5, bringing the price to 78.6% Fibonacci retracement level. Here, this is a bearish trade setup. We'll apply the trading drill or a top-down trading method, all right? The setup, the signal, and the low-risk entry point. So at this point in time, if you see this like this, a zigzag pattern on a daily chart, after a bearish move, as a swing trader, we can, as a TSTWSY08 trader or a swing trader, we can look for opportunity to sell here. But we will not assume anything, all right? Do not assume anything, but just draw a warning line there, and know that this is a bearish setup. If the price finds a resistance right here, and we apply the trading drill and the trading triangle, check the economy news, check the fundamentals, all right, you are satisfied. Now go to the signal time frame and select a low risk entry point, and the price has a high chance to continue to go down. You see here, it went up first, and then we have a zigzag pattern ended here. As a swing trader, we'll check the economy news and the Google Finance, perform the Google Finance acid test, and we'll apply the trading drill, okay, the setup, the signal, and the low risk entry point. We will look for opportunity to buy right here. This is the power of the zigzag pattern. By understanding the internal wave and the formation of the zigzag pattern, where and when the pattern is formed, and the internal wave or the anatomy of the zigzag pattern, we are likely to make excellent decisions or to time the market more accurately. So for instance, if I see the price goes up very fast like this, bullishly, and then come down 1, 2, 3, 4, 5, and then stop here, I will just draw my warning line there, okay? If I am a TSTW24 trader, I just go to the first best time frame, looking for opportunity to buy here. I receive a buy signal here. Do not assume anything. This is not exact science. These are guidelines. And if the price is fulfilling our expectation, we will take advantage of it. So as a TSTW24 trader, we draw the line, we switch to the first best time frame, and if we receive a bullish signal, we'll take it, and when there is a high time, we go up, retracing up to 50% of the A wave of the zigzag pattern. Prior reaches, completed the B wave. We know that the B wave formed of 3 waves, okay? So 1, 2, 3. Very often you bring it to the 50% of the A wave, but do not assume anything can go more up All right, gently, because there are different patterns in the market. All right, that's why it's very important. So you will see, suppose you see on the 2 hours chart or 4 hours chart or daily chart as a day trader, you switch to the first best time frame, okay, to enter the trade as a TSTW 24 trader. If you want to swing trade, use the TSTW use your 8. Here, we will go to the signal time frame, wait for signal, and enter the trade, okay, using the TSTW key 02 on the edge. But we will also check the economy news and perform the Google Finance Asset test if you are trading stocks or commodity. Very, very important. Also for Forex. All right? This is the power of the zigzag pattern. A trader who understands the internal wave or the anatomy of the zigzag pattern is likely to time the market more accurately. We know that the zigzag pattern is a corrective wave. So first condition, ladies and gentlemen, we must see either a bullish move or a bearish move followed by the zigzag pattern. We can also trade when the zigzag pattern is being formed, which means here it goes down 1, 2, 3, 4, 5. We know that this is a corrective wave. Okay, we know that it's a corrective wave. All right, it's a zigzag pattern is being formed. We know that it's not yet completed. We can buy here and then sell here, and then again take profit here and look for opportunity to buy here. As always, we do not want to violate the market patterns, rising channel, declining channel, horizontal channel. So on your signal time frame, draw the channel. On your signal time frame, draw the channel. On your setup time frame, draw the channel. On your entry time frame, draw the channel. Do not violate the market pattern on any time frame. The market patterns, the 3 market pattern, rising channel, declining channel, horizontal market pattern, will control any other pattern, including the Elliott wave pattern, the Fibonacci pattern, and the chart pattern. There are only 3 market patterns. In order to achieve consistent winning trade, day trading or swing trading, we must not violate the market pattern. So we are not violating the market pattern on the setup time frame, on the signal time frame, and also on the entry time frame. We are not assuming anything. We just draw a warning line and we will apply the trading drill. Set up signal, low risk entry. We're using multiple time frame trading method. All right. If the signal fails, just carve out. Don't force it. You want to pay attention to the economy news, trading forex, trading commodity. Check the economy news, check the financials. If you trade in the stocks, perform at least Google Finance test. Okay. And then take it gently. If the signal fails, if the price dips below your warning line or goes above your warning line, do not fight it, pull out. Until the next time, enjoy yourself and be very happy. This is about the power of the zigzag pattern. We know that the zigzag pattern is often formed after a leading diagonal. The leading diagonal is a complex first Elliott wave. It's also formed after a multi-wave. The multi-wave is formed of first wave, second wave, third wave, okay, fourth wave, and the fifth wave. Talking about the multi-wave, is a trending phase of an Elliott wave cycle. Thank you for watching, and then we will speak to you very soon. As always, test it, practice, read more, master it before you go live. Very, very important. Do not just use it once and then say it doesn't work and then you dump it. Practice, go back to it until you master it. Thank you for watching, and we will speak to you very soon. We are the TSTW 24 traders talking about the power of the zigzag pattern. Speak to you soon.